Hello, today we're going to talk about how short sales work from the homeowner's point of view. Not from an investor's point of view, not from the real estate agent point of view, or a buyer's point of view, but from the homeowner's point of view. Here's the agenda. What is a short sale? What are your options to foreclosure? What are the negatives to a short sale? What are the benefits of a short sale? And how does the process work? What is a short sale? A short sale is a sale of a property in which the proceeds are insufficient to satisfy liens against the property. It is possible that lenders will agree to accept the proceeds of a short sale and forgive the rest of what is owed to them on the mortgage. Many people ask why the bank might want to do something like this, and sometimes it makes more sense for them to accept a short sale than foreclose on the property. It's all about if the numbers work out for them, and if it does, they generally will accept a short sale, and they have their own special formula and guidelines for that. What are your options to foreclosure? Number one, loan modification, repayment plan, short sale, or foreclosure. Loan modification, typically you call your bank, you talk to them and tell them your situation, and they'll try to work out a loan modification. They'll either try to extend your loan term so that it reduces your monthly payment, or they will lower your interest rate to help reduce your monthly payment, or they try to reduce your principal amount owed on the loan so that that will also reduce your monthly payment. Now, this sounds like a great option, but it typically will not reduce your payment enough to make financial sense to you. Typically, it's only about $100 to $200 reduction, and more than likely, the homeowner is in more trouble than that, and maybe cannot even afford that reduction in the monthly payment. The second thing item is a repayment plan. A repayment plan generally allows you to make your payments or make up missed payments over a period of time. Now, although it sounds great, also it just doesn't make much sense if the homeowner is already struggling. They won't be able to make missed payments up by adding it to their current monthly payment. So generally that doesn't make a whole lot of sense. The third thing is, which is the bulk of this presentation, is a short sale. Short sale is definitely one of the better options, especially to foreclosure. The bank will generally take less than what is owed to them due to current market conditions or your situation. And the fourth item is foreclosure. You definitely want to avoid foreclosure at all possible. Now we're going to talk about what are the negative aspects of a short sale. Well, number one, the impact of late payments. We've estimated that it affects your credit score by 30 to 40 points per late payment. You also have an impact of serious delinquency, which is one of the worst type of delinquency that you can have on your credit report. And per Fannie Mae guidelines, after 2 years, you can, and your credit's built back up and it's good, you can get another Fannie Mae loan approved after a short sale. Now, if you have a foreclosure, it takes 5 years to get another Fannie Mae loan. So basically, a short sale will cut your time, and you'll be able to purchase a home again within 2 years. What are the positive aspects of a short sale? Well, one of the biggest benefits is that you were not foreclosed on. You can say you were not foreclosed on because you weren't. You made an arrangement with the bank that was acceptable to both of you, and made it a win-win situation for everyone, and you did your best to pay the bank off in full. The second thing is that the sooner you decide that you're in a short sale situation and the sooner you take action, you will save your credit score. We all know that your credit score is based on how many payments you have made over a time period, and how many of those payments were on time. So the sooner you can get back on that track of making your payments on time, you can build your credit back up. Per Fannie Mae guidelines, if you do a short sale, you will be able to purchase a property in 2 years. So you do the short sale. Once that short sale shows paid in full on your credit, 2 years from that point, you can at least think about buying a property again if you take the right steps to build your credit. So, those are definitely all positive aspects of a short sale. How does the process work? Well, first, you'll notify the bank of your attempt to sell the property. The bank wants to know that you're making the best effort to sell the property and for full market or to be able to pay off the loan in full. And if you cannot, then that's when they want to think about accepting a short sale. You want to market the property for sale. You can either do it on your own or you can hire a professional. Basically, if you're worried about paying commissions, don't, because it's not going to come from you, it's going to come from the bank, and generally the banks are agree to pay the commissions. They want you to make every and the best effort to market your property fully and to reach out to as many buyers as possible. Once you find a buyer, you sign an offer, and you want to find that buyer as quickly as possible. The sooner you get a short sale closed, the sooner it stops impacting your credit score. So you sign an offer, you submit it to the bank. The bank will review that offer, and if it makes sense to them per their formula, you will be able to either get a counter offer, they'll accept the offer, or they could outright reject the offer. But basically, you submit the offer to the bank, and it can take anywhere from 2 weeks to 4 weeks to get a response from the bank. From my experience, it seems like they are responding a lot faster. These are becoming more common, and so it looks like they've upped their resources to respond quicker. What they do once they get the offer is they ask for a broker price opinion, and it's short of an appraisal, but they want to get an independent party's evaluation of the property to make sure that it makes sense for them to take a short sale or to foreclose on the property. Usually the banks can make a final decision within, in my experience, 2 weeks these days, sometimes up to 4 weeks and 6 weeks. And depending if there's a second mortgage involved, it's a little bit more involved, but process is still the same for both banks, and it just takes a little bit more coordination to help get them organized and come to an agreement to work with each other. So I hope this has helped you in your quest for information. If you'd like more information, give me a call. I'm at 505-350-8184. Or you can email me at carlosreym@aol.com. That's CarlosReym@aol.com. Or you can also click the contact tab at the top of the web page and send me fill out the form and send me your information from there. Send me all your questions. I'd be happy to help, and hope all is well. Thank you.